Yeah, so I think the first quarter is going to be pretty tricky for everybody. The fire is starting to be contained around coronavirus, but the house is still on fire, so we don't know what we've lost in the fire. We're going to see a significant impact on growth in the first quarter at least. We remain fairly optimistic. You have to look through it, and we remain pretty certain that if you want to make decent returns, you need to stay in equities. Albeit, we think there will be rather lower returns than we've seen in recent years. We think the US will accelerate a bit, so that the main changes we've made in this first quarter is we've upped our US exposure a bit, not ready to dip back into that European value you were just touching on. Still think there's too many headwinds there, and nervous about China and emerging markets, actually more broadly than just the coronavirus. I think the coronavirus accelerates some trends that we've seen in China, but it's not the only thing.
Do you increase your investments into alternatives, into gold, into bonds to try and counterweight that increased risk that you identify?
So we do own some gold, and we have purchased some more gold to give us a bit of inflation insurance. Alternatives is a really tricky space. Our investors have to buy regulated funds or direct equities really, and the reality is most of these alternative investments have disappointed investors quite badly. Where we've gone is sort of structured equity solutions, things that give people quite a lot of participation in the equity market but a bit of protection.
So you think that investors should look through the coronavirus? And how much of that is predicated on the Beijing and the Chinese authorities coming in and offering more stimulus to offset the negative impact?
Yeah, look, it certainly had a big impact, the stimulus that they provided, partly just because it's given us optimism that they will do whatever it takes. I think the problem is they've shut the factories too, and you can't leave factories shut forever. So that's why I think people are so delighted that they are seeing that decline in the new cases within the Hubei province in the last few days. The problem is, I think, is that what happens in the longer term? Once the monetary stimulus has flushed through the system, how does this change the reaction function of chief executives and boards as they think about their reliance on China in the months and the years ahead? And I think it will have quite a significant impact, really. It's been a reminder that since SARS, we've become much more dependent on China, across every industry and every sector. And front and center of minds is going to be, how do I just diversify my supply chain a little bit? All of that, I think, provides a significant headwind, for Chinese shares over the coming year.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.